This is the Traders Questions podcast, where I answer questions people ask me when I tell them what I do. My name is Ade, and I trade Forex, metals, indices, oil, and crypto. I am what is referred to as a fund manager, and in the series of this podcast, I'll be responding to questions that have to do with what I do and how I go about achieving my targets in trading. So today's question is it necessary to demo trade? And if so, how do I know for how long? So this is a two-part question, and this question comes from Tariq, and Tariq is from Birmingham in the UK. So the first part is why demo trade? So I'll answer that first, and then I'll go on to how long you need to trade for. The first reason why you should demo trade is because it provides you risk-free learning. Demo trading allows you to gain experience and understanding the mechanics of trading without risk. It's crucial for beginners to learn how to execute trades using trading platforms and understanding market dynamics. It's like going on a flight simulation as a pilot. It allows you to perform the required maneuvers without the risk to life or property. And the next reason, that brings me on to my next point, strategy testing is another reason why demo trading is important. It allows potential or aspiring traders to use demo accounts to test different trading strategies. And you can obviously use your demo account to refine these strategies before applying them to live markets. And it helps you identify what works and what doesn't work without the financial consequence of real trading. So essentially, it moves on from the first point where it's risk-free, and it also allows you to test your strategy without risking your capital. Because as a fund manager, your primary role is to protect your capital by taking calculated risks. The next reason why demo trading is essential is it helps you familiarize yourself with the various trading platforms. There are different brokers and there are different platforms used to trade Forex. So Forex, metals, indices, oil or crypto, whatever asset you choose to trade, you may need to get familiar with how to operate the various platforms out there. Another thing I've noticed is the fact that spread means I trade using candlesticks. So the spread usually means you have different size candlesticks depending on what broker you're using. Now, the impact this has on a trader who relies heavily on technical analysis and indicators, essentially, if a candlestick is 10 pips lower than where it should be, that could have an adverse effect on whether or not I take that trade. Therefore, it's providing a false signal. So this is something I always advise. Whatever platform you use to demo trade, use that platform as your reference when you're trading. So for instance, if you've decided to take a prop firm challenge, you will find that the prop firm challenge charts are different from the charts you use to demo trade and learn how to implement your system. So my advice would be conduct your analysis on the charts where you back tested and you made your trading decisions, and now use that chart to trade whatever other external chart you're trading. So bear that in mind. Psychological preparation is another reason why trading a demo account is very important. Trading can be emotionally challenging and losses can be stressful. So demo trading allows traders to develop emotional resilience and discipline without the pressure of real money on the line. Trading psychology is one of the main reasons for traders suffering varying amounts of losses. I I'm speaking from first-hand experience here, and I could give you a strategy that I know works and a strategy I currently use, but we can both still have different results for this reason, because psychology for trading is very essential. The next reason why trading a demo account is important is because it helps build confidence. Demo trading can help build confidence in your trading abilities, and it provides a sense of accomplishment, and it prepares you for the psychological challenges of live trading. Now, I always hear some people say trading a demo account is nothing like trading a real money account, but I'll tell you this: the more you practice on a demo account and you become less emotionally attached to trades, the better you will become. And demo trading allows you to do that without paying the costs, the financial cost. You obviously have to spend time doing it, but the financial cost of learning things as you trade is something I wouldn't recommend to anyone. It's something I did at some point, but it's not recommended. You don't need to do it until you're making consistent returns. Finally, demo trading allows you to experience different market conditions, such as ranging markets, trending markets, or volatile conditions. And this experience can be valuable when deciding how to adjust your strategies based on the current market you're in. So, a ranging market for a trend trader is a nightmare, and your system needs to be able to handle a series of losses before you get back onto the trend. So these are the reasons why I would say trading a demo account is essential for anyone who wants long-term success, and success is profitability at the end of the day. So the second part of the question is, how long should you demo trade for before trading real cash? And I will say you should trade a demo account for a minimum of 6 months with a target to make 6% at the end of 6 months. So what that means is, don't over leverage, put on one trade risking 10%, and when you get to the 6% mark, you close the account or you close the trade and you say to me, look, I've made 6%. No, you need to trade for 6 months. Over that 6 month period, managing your risk effectively and having an overall balance plus 6% from the day you started trading. When you have achieved that for the first 6 months, do it for another 6. If you've managed to make 12% at the end of 12 months, then essentially you're making more than your bank is paying you on whatever you have saved at the moment. I don't know what part of the world you're in, but I doubt any bank is paying you 12% a year on your savings. So trade a demo account for 6 months, make 6% after a 6 month period. Keep trading, make another 6% overall. I'm not saying you can't lose that 6% because the markets go up and down. I know that. But at the end of 12 months, you should have made 12%, maintaining the same risk levels per trade. So that's what I would say to that question. I hope this helps you, Tariq, and I hope that helps you become a better trader, because it's a long journey. A lot of people would like you to believe that it's something you can learn today and start making money tomorrow. That's not true. Trading takes time, it takes practice, and it takes discipline. So until next time, good luck, happy trading.